Income Tax 2020, Practice Problem 1, Presentation 8, Adjustments to Income, Student Loan Interest. Come in, relax with Income Tax 2020. Here we are in our Lacerte tax software. You don't need the Lacerte tax software to follow along, although I do think there's a free 30-day trial, so if you can get access to a promotional version of it or any other tax software, it could be a good tool to practice with. In prior presentations for our practice problem, we've been entering data for the income side of things, including W-2s, dividend income, other income, adding up to, in essence, our total income line here. Now we're focusing in on those items that are going to be the adjustments to income, those typically being on the Schedule 1 or coming from the Schedule 1 Part 2. So these are going to be the items that we're going to be looking into. Note that these items are less frequent than, say, if someone is itemizing, then the itemized deduction. So we'll go over some of these items in context, but just realize that many of the deductions that come to people's mind are going to be itemized deductions, which we will talk about later. Those are going to be the below the line deductions, and those would only be taken if you're taking the itemized deduction as opposed to the standard deduction. So we're still looking into the standard deduction here, and we'll take a look at basically itemized deductions in a future presentation. Also note that as you do the data input, it's easiest to kind of pick up the income line items because those are the ones you typically have forms for, like W-2 forms and 1099 forms and so on. And then when you get to the deductions, it's less likely that you're going to have the backup documentation. When you look at the above the line deductions versus the itemized deductions, if they are not itemizing, then of course we'll just go to any above the line deductions that we have, taking the standard deductions for the itemized deductions. If they are itemizing, then it's possible that the next kind of forms that we'll take a look at will possibly be the itemized deductions, like the mortgage interest and the property taxes on the home typically, because those are the next things that are kind of big and relevant. So in other words, we're going kind of from top to bottom here, income, and then the above the line deductions, and then the below the line deductions for itemized deductions. But if the return was itemizing, it's quite possible that you start to enter the itemized deductions first. You can do it kind of either way. You might want to do the above the line deductions first because that will have an impact on the adjusted gross income, and the adjusted gross income could impact phase outs, which are going to have an impact possibly on some of the itemized deductions. But just note, when you're just doing the data input, the next big things that you're looking at for the data input will probably be the mortgage interest if they are itemizing, and then the property taxes, which is the next thing you might go to first before going to some of the above the line, which could be smaller depending on the return. Okay, that said, let's go into it here. We're going to say that now we have our student loan interest. So student loan interest, again, fairly small kind of item typically, and there's a phase out on the student loan interest, so it may not have an impact depending on the level of income. So we're going to say it's going to be a 1098 now. So whenever you get a 1099, you're thinking, oh, this is something I might have to include in income. When you get a 1098, then you're thinking, okay, this might have some other impact on the tax return, such as possibly go towards a credit or a deduction or something like that. So here we're thinking, okay, 1099, 1098 student loan interest, that possibly could be something deductible, could be an above the line deduction, meaning you don't have to itemize typically to take it, but there's an income limitation on it. So I'm going to go and say, okay, maybe it's somewhere here on the Schedule 1, like an above the line deduction, and then I'm going to go down to the adjustments, and then we'll look through here and say, okay, is there anything for student loan interest here? And there we have on line 20, student loan interest deduction. That looks like it. Let's see if I can do my jump to thing with Lacerte, like right click on it and say jump to it, and then there it is, going right there. And so the amount that we paid, and most of the time you'll have the documentation for this at 1098, so it's fairly straightforward with the data input, 1,850, 1,850. And now the only question is it phased out based on our income? If it is, I'm kind of reliant on the software. That's where I'm kind of reliant on the software. So if I jump back on over, I'm going to say, oh, wait, there it is, 1,850. If I take the worksheet here, the 1,850, it has the cap. It looks like the cap goes up to this 140. So it doesn't look like we're affected by the cap. And at this point, we get to take it. Now notice this could change. Like, I mean, if we keep on entering data, like we're going to go to a Schedule C income and whatnot, if other income happens and their income goes up above the threshold, then possibly they're not going to get the student loan interest. If it doesn't show up here in the software, your first thought is, oh, maybe there's an AGI limitation. And then you want to go into the worksheet and look in the software and see whether or not that's the reason why it's not popping up here. So that's going to be it. That's going to flow into line 22, 1,850. That'll then pull forward to the Form 1040. So the Form 1040 is on line 10A from Schedule 1, line 22. There's the 1,850. There it is on line 10C. So we had then our total income, 8130 from the prior presentations. Now we got the above the line deductions now at the 1,850 to get to our adjusted gross income, our AGI. Notice this is an important number because this is the number that the phase outs are typically going to be calculated on, not the income number. So that's why these have an impact on the phase outs, which could take an effect if we're itemizing. We're not right now. We're taking the standard deduction at $24,800 for the married filing joint standard deduction to get us to the taxable income of the $54,380. Then page 2, the tax calculated by the software at this point at the $5,974. We've got the $800, which was the withholdings from the W-2 from my prior presentation. We now have the refund at the $2,026.